All right, welcome to the show here. So I'm here with Danielle Unsworth. She's a real estate investment coach, co-founder of the Women's Investors Network of Canada, which she can speak about as well. And she helps women and mothers who are like-minded get together, accomplish great things in real estate investment and business. And she gives back through sponsorships, educating her students on how to purchase their first property as well as scale their portfolio. So Danielle, tell us a little bit about yourself, what brings you here, and how you got started.
Hi, Sam. Thank you so much for having me. So my journey is very accidental. I started buying real estate at 24, a full-time waitress. I had no idea what I was doing, really. So I just kind of went into it, didn't realize that's what I was doing. I was investing in real estate. And then I learned the power of refinancing, and that's how I pretty much started using equity and buying more properties. And then in the last 3, 4 years, I shared my journey on social media. And that's when I really learned the power of investing in yourself by working with coaches, joining mastermind groups. And that's when I really was able to take my real estate portfolio to the next level. And really just working with joint venture partnerships, sharing my journey, and that's why I'm here. I ended up co-founding the Women Investors Network Canada, like you mentioned. So we are across Canada, and I really just love teaching beginners, especially women, how to get started, how to invest, and just really build that financial security for themselves and their families. Because especially in this, economy, in this environment, I feel that if you have, at least one rental property or just one property, it really makes a big difference in terms of leveraging that security for yourself. It's kind of like a forced savings account. That's what I call it. And that's what brings me a lot of fulfillment.
It's incredible. So definitely diving deep a little bit about you using the power of refinancing with the Women's Investment Network. How did that come about, and what impact does it have on these women who are looking to either, start into real estate investing and wealth building?
So yeah, so we created this organization in 2021, right in the middle of the pandemic, just because we felt I connected with a few other women online, and we felt really sort of alone in like our own circles, and we felt like there was like this need for women to connect. At that time, it was mostly online, and then we, ventured into in-person meetups just to create a safe space for women to come together, talk about finances, talk about real estate, talk about balancing work life, and sharing our goals so that we don't feel so crazy, when we share our ideas and our bigger goals with our circles. Sometimes we feel like, we're like too much, or but when you're in a room where everybody kind of wants the same goals, it makes you feel so much more supported. You don't feel like a crazy person because you're always talking about finances and investing in real estate. So it makes you feel really good, and it gives you that confidence, to keep moving forward. And then when you need support, you know that the women are not going to judge you. They're going to find resources to help you. And so that's kind of what happened with Wink. We ended up, just here, a local chapter in Ottawa, and then we started growing. We ended up having a chapter in Toronto, Montreal, Halifax, all the way to Vancouver. And it's still growing. We have an international chapter now. So it's just been amazing watching people, especially women, take charge of their finances, and just, knowing that they can rely on this community to either make the right connections, get the right support, or just even guide them to the right resources, right? Sometimes it's not always about, um, uh, you know, uh, finding that person, but it's also just finding that person to help you find the right resource. So that's kind of like what we do, just help educate and support women who really want to just make a change in their lives.
That's definitely interesting because it seems like you're definitely creating an environment where people can share their goals, like you said. And I think when goals are in the earlier stages, they can either be, not pursued, but if you have the right environment, it's going to allow them to flourish. So are you creating more leaders in that organization where the other students or people are coming up and actually able to now help other women, empower them? What's that look like right now for you?
Yes, so our co-hosts have a lot of autonomy within the chapters that they run. And so a lot of the meetups either consist of having speakers, so then we make it a lot more educational, and other chapters, it's more about networking. So we are really sort of cultivating the different chapters and what each chapter needs. So some local chapters prefer like in person, others like the online version. So it's really it adapts to that community just because we're so diverse. Like it's across Canada. Every community has their own sort of target goals and audience. So really we give the local chapters a lot of autonomy and they can grow their own sort of community in that way. And we also have online events for all the women across Canada. So that way we can sort of tap into everybody's sort of strengths and weaknesses and sort of help each other out when we need to.
And so someone would like to be a part of a chapter, regardless of their journey or their knowledge on real estate investing or their portfolio. How can they reach out, and what's kind of the future? What do you see for this organization with Wink?
So we are always looking for co-hosts in different parts of Canada. And so, if someone is interested, they can send me an email, they can go to my website, or they can follow us on our Instagram page, which I'm sure we'll share
We'll
here.
share that in the notes. Absolutely.
Exactly.
Yeah.
And so we have a questionnaire. We do like women to, and you don't necessarily have to have real estate experience, but as long as you want to learn and want to contribute to that environment, we're more than happy to work with you to guide you through it, because for us having the right mindset is way more important than having experience, right? You can always gain experience, but having the right mindset is much harder to sort of shape. You have to be ready to have that mindset. So that's how we approach our I guess our mission.
Okay. Yeah, it definitely seems like you have to, you're investing in these other people and investing in yourself and creating great partnerships and relationships. And also, you're obviously a mom as well. And you probably get this a lot. I think you did an episode on of it. What do you do to balance or counterbalance, if you will, your real estate investment portfolio, your obligations, and all those things with partners, and also being a mom as well? What does that look like for you?
Yes, so I do get asked this question a lot because people who do follow me on Instagram, they'll see me like, taking dance classes, I'm at the gym, and then I'm, picking apples with my kids. So for me, the secret really is having excellent time management skills. I really love to schedule things at least 2 weeks in advance. I give myself buffer times. I plug in everything that I want to do ahead of time, and then everything else is considered extra. And then I plug those activities in based on what I have available. So for me, for example, I have set days where, I have my family time. I have day time set for like my workouts. And then every Thursday at 7, let's say, I have my dance. So everything is already like pre-populated for me. And that's really the best way to balance, is to have really good time management skills. And a really good book for that I recommend is called The Perfect Week Formula. People can go check that out. I find it super helpful. And another secret besides time management for me is actually delegation. Since I started working with virtual assistants, I find it's like I have, mini clones of me working while I'm, having fun with my family. One of my VAs is creating a presentation for me that I'm going to need, for the next week. And then when my kids are in bed, I'll have some time and I'll review the presentation, for example, and give some feedback. So really, if you can master those two things, time management and delegation, that's really where you would create that balance. And without one and the other, it's kind of hard. Like if you're juggling everything yourself and you're not planning things ahead of time, it's going to be really hard to manage the things that you want to do.
That's a great answer. So with you, I know you've scaled up to, with partners up to over 100 and I believe 100 units, which is incredible. Tell me a little bit about that journey of growth when you said you got to a couple properties, you understand the power of refinancing and using equity. What was that light bulb that went off that allowed you to really start doing it and scaling it up to, to actually a really great freedom living as well.
Thank you. Thank you so much. So for me, what kind of like, clicked was refinancing, but then also partnering. Like you don't have to do all the work yourself all the time, right? Like when you leverage other people's skills and time, it also opens up your time and then you're allowing your money to work for you. So what I ended up doing was all the properties I owned personally when prices were like super high, I realized this is the time to refinance. So I refinanced everything at the lower rate. So I was able to get a whole like chunk of equity. And I used that equity to either to invest passively with other people's deals, or I, did some private lending with it. But then I also learned how to raise capital. And when I was able to learn how to raise capital, that's when I was able to do deals and partner with other people who also had capital, waiting to, invest in different deals. So because I was able to do both sides, work the both sides of the coin, as you would call it, like I was able to be a passive investor and an active investor. That's really how my portfolio grew, because a lot of the times people are either passive or active. But by doing both and doing private lending, I was able to really tap into so many different ways of investing. And that's how I was able to grow so quickly. But I was also very fortunate that I had owned a small portfolio before, I really dove into this industry just by accident, right? So that gave me sort of like a little head start.
So it seems like you definitely, you had a great cycle. You utilized that. You started understanding what partnership, utilizing partners. Now, right now in this market, do you recommend that maybe someone starts with a small portfolio, or do you recommend that they wait for another cycle to maybe refinance and leverage that? What should they consider if they're, going to start out, or when you're talking to a new student? What does that look like when you're starting them off to the first few properties?
Yes, so I think it really depends. The first thing I always ask my students is, what is your goal? Like, are you actually in it to be an active investor, or are you just going into real estate because you eventually want to be passive? So that's the first thing I would suggest, is determining your goal, because a lot of times people, they see, people being active and it's like so exciting. You want to raise money but then they realize it's another job, right? At the end of the day, that's what it is. So depending on what you actually want to do with your time, then you kind of decide what strategy you want to do. If you want to learn to raise money and be an active investor, now is a really great time, because people are not sure really what to do with their capital. I would think there are people who are sitting on a lot of capital waiting for things, or waiting for things to change, or waiting for a really good deal. So if you're able to go and find a really good deal, you're going to be able to tap into all those investors that have that money sort of just waiting for that opportunity. And another thing I would say is, if you're able to buy a property yourself, like you have the capital and you've been waiting, now is a good time to go and look for those deals for yourself so that you can start building your portfolio. And the only way really right now to get a good deal is to either, drive for dollars, do, through word of mouth. You really need to get into that off market environment to get a good deal right now. And I think for new investors, that's what I would recommend. Like, you really do have to put in the work to find those good deals. But now is a great time to get into the market, right? Because this reminds me a lot of when I first started, which was in 2008, when people were not sure about what to do with the real estate market. For me, I just wish I had bought more properties at that time. And I didn't even know what I was doing then. I just had this weird feeling like, okay, I should buy something because everything is at a reduced price. You know what I mean?
Mm-hmm.
So to me, that's how I look at it. So if people are starting to want to invest in real estate, I would say you have to put in the work to find those good deals, whether it's through Kijiji ads, Facebook, door knocking, driving for dollars, and just telling everybody in the world that you're looking to buy a property so that you can tap into that off market world. And I say, like, go for it, because that's how you're going to get those deals.
That's incredible. So when you started raising capital, like, are there certain principles that you started to follow? Did you sort of started to advertise what you're doing as far as we funded this deal? Because I find sometimes some people will be hesitant, some people will be more open to it. Some people say, well, I'm giving up this portion. So they're not really understanding that,
Mhm.
half of a watermelon is more than a whole grape. But what are your thoughts on that? I mean, definitely raising money. What allowed you to kind of get into that? And what are some things that are important to in understanding how to raise money and capital?
That's such a good question, Sam, because a lot of times you're right. When raise money, people were like, well, I'm giving you all my money. What are you going to be doing if you're not going to put any money into it? And so for me, you have to really, believe in your deal. Like you have to truly believe that your deal is amazing and you're going to be able to give your investors a great return. And secondly, it has to be a deal that, you have a lot invested in it as well, whether it's money or your time or your energy in the future. Your investors need to see that. They need to see that you're committed to the deal as well. And then third, I try my best to really make sure that the investor understand the strategy of the deal and like the timeline it's going to take. And I really just I want to make sure that they know what is involved, because sometimes you work with a partner or a potential investor and they're not 100% sure of what's going on in the deal, and then they either like back out or halfway they ask questions that should have been asked maybe at the beginning, and it sort of throws everything into a loop. So I always make sure that I have like frequently asked questions. So that's a really good tip. So when people are raising money for a particular deal, I always say, create a section of like your top 10 questions that you think people are going to ask you or that you've received a lot, so that you're prepared to respond, and then they already have the answers ready. So I think that's really important. And then also making sure you're working with experienced investors, because as much as new investors want to come in on a deal and partner with you, sometimes it's not always the best way to start a deal if they're really new to real estate, because they might just have certain assumptions about real estate based on things they've seen on YouTube or on Instagram, and it's not actual like reality of what
Yeah.
happens, or they think it's going to go like exactly the exact way that it's supposed to be. And as you know, in real estate, things can change very quickly. People have to be able to adapt and be flexible to new strategies, etc. So I don't recommend brand new investors to come in and partner on a deal without having some sort of experience themselves, at least like going through maybe one full deal on their own, so they understand like the A to Z
Mhm.
of a deal before starting. Because the worst thing is working with a brand new investor, and then when something goes wrong, they're so upset about it. And if they had been experienced, it would have been something that they would have been able to like adapt to. So I think that's
Yeah.
really important.
That's a great point because you find sometimes that they're more influenced by the squirrel syndrome, right? Like going to
Mhm,
this year, I found this project, I found the strategy. Now let's start flipping boats or let's start
mhm,
land leases. So it just goes all over the place, or getting family advice that may not be
mhm,
qualified advice, right? That
mhm,
probably happens all the time, at least in our
mhm,
world too. So it seems like you help investors get started in empowering them in getting to their first property, buying their first property. What allows that program to be successful? Like, what are things that are highlights of that program that help people buying their first property? Because I feel like that's very important. You don't necessarily have to have 100 doors, but
mhm.
allows them to get a few properties so they can understand, the process.
Yeah, so I think for me, that first one, the first property is the hardest, right? Because you have so much fear, there's so much unknown. So to me, I'm pretty much giving the sort of guidance and mentorship that I wish I had received when I bought my first property. Because let me tell you, that first property was a disaster. Like, I did not have a home inspection, I didn't have a pre-approval, like it was a mess. And so that's why it's so important for me to help people buy their first property the right way, so they don't have to go through all of that stress and like craziness that I went through the first time I bought my property. And the reason why it's so successful for me is that I really make sure that they're ready to buy it, because sometimes buying your first property when you're not quite ready is very, very stressful, and it's not always in their best interest. So for me, it's like I need to make sure that, you know, you understand the goal, you have a good financial foundation, and that you're actually going to, you know, keep the property for X amount of time. Otherwise, it's actually going to end up maybe costing you money, right? So those are the things that I tell my students, and I also work with them through it. And a lot of times I find people just need that little like encouragement to take that one extra step. Like, for example, I'll just say, did you get a pre-approval if you're interested in buying a property? And they'll say, no, I don't think I qualify. And then I'll say, well, how do you know you didn't apply?
Mhm.
And even if you don't qualify, because a lot of times people have that fear of rejection, I'll say, even if you don't qualify, you'll know why you didn't qualify. So then you can work towards getting yourself qualified, right? So it's not always a bad thing to get rejected. It just tells you what you need to work on to get to that level of that approval. And so I turn in and I say, it's a good thing, you know, now you know, before you didn't, and now you know what to do. So it's really just having that, you know, giving that extra support and extra guidance makes a huge difference.
Yeah, that's phenomenal, because it seems like you're definitely allowing failure to be a good thing, and to reiterating iteration process, and
Mhm.
using that capital and saying, okay, how do we help guide you? What are the mistakes that I made? So mentorship, your coaching program is probably awesome, because it seems
Thank
like
you.
it's going to help people avoid those things. What are some things that you wished that you would teach yourself now, if you were doing this now, that are kind of timeless for the market, that still allow investors to do their first one successfully? Because I feel like some people, if they don't do it correctly, then they have to start over again later. So what are your thoughts on that? I mean, just curious.
Yeah. So to me personally, I think every investor needs to understand and feel confident in underwriting their deals. Like a simple cash flow analysis, you need to be super confident in your numbers, right? A lot of the times I find the new investors, they just put in you know, the basic expenses, but they don't put in all of the future expenses. So that really eats away at their cash flow. And then like when something happens, they're just super surprised that they didn't include it. And the biggest mistake I see is the property management fees not included in their cash flow analysis, because they think they're going to do it themselves. So
Right.
they're not including it. And I always tell my students, even if you do it yourself, just put it in, so that way later on in the future, when you're not going to manage it yourself, at least it's covered, and now you're not going to be into like the negatives, right? And and I always say, like, there's no harm in adding it, because even though you're not paying it, you should just take that money and pay yourself, and then you can put that into a reserve for that property. So there's different options that you can do to make sure that you're really sort of well buffered for that property. So I think that's the number one thing I would recommend, is making sure you're super confident in your cash flow analysis, in your underwriting, so that when you see a deal come through, you know, like for me, when I underwrite properties, especially in Ottawa, because I know like the average of everything, because I've been here for like 30 years, you know, so I can like plug in property taxes, utilities, like all of that, property insurance. You know, if you tell me a townhouse, 3-bedroom townhouse, I'll tell you how much it is for insurance on average. So when you get super confident in your numbers based on the area that you invest in, it becomes super easy, and it becomes very, very easy to make offers. And then you can
Yeah.
move quickly, right? Because with real estate, sometimes speed is everything.
Mm.
Sometimes if you are super confident with your numbers and you could do your underwriting, your cash flow analysis quickly, you can start to make your offers quickly, and then you get access to those deals faster than someone who's still trying to figure out, you know, what the rental market would be for that property, right? So you see what I
Right.
mean? So I feel like that's super important.
So definitely confident in your numbers, and we'll make sure that we have a link to your site. So if people have
Thank
questions
you.
that they want to get some information on, I think there's definitely great. Having a performer is really important for sure. So when it comes to this market, what are some strategies you think that are helping people that are working? Like, for example, we had a client that, we've had clients that do triplex conversions, and one who wants to keep all his money in the deal, and it's not actually, or out of the deal, and do a perfect burr, not quite working for him. Uh, what what do you think? Do you look at the ROI total? Do you say what risk can you sustain? Do you look at, yeah, let's start there. I have some questions on that.
Yeah, so in this market, there are certain strategies that I personally find are not really working very well. Like for example, the duplex conversion in this market, for me, it's not really ideal because the home prices, the prices of, construction, and then going through like the permit process is not as lengthy as it used to be. But the numbers for me, they don't really make sense in terms of the return on investment anymore. So that's something I don't really recommend right now. But I do recommend buying it if you can, and holding it for later, adding that
Okay.
basement, or because of Bill 23, you can add a garden suite. So for me, it's looking at the whole property, like how large is your lot? Can you add, like a garden suite or a coach house in the backyard, and then later on add that basement suite when prices, you know, make more
Come up.
sense.
Yeah.
Exactly. So that to me makes that's like, that would be a good strategy. And also for multi-families, I think it's also important to make sure that you are able to hold it for a long period of time, because right now, if your plan is to bury it in a year or two, you most likely won't be able to do that just because of the interest rates.
Mhm.
So it's definitely more of a buy and hold time right now. If you find a good deal and you find investors that are okay holding on to that property for the next, I'm going to say 3 to 5 years, ideally 5 years, that would be a better strategy. So right now it's not really like about moving your money from deal to deal. It's more about investing in that money for longer term
Okay.
wealth
So,
building.
so you're saying almost purchase it, understand the game plan with the asset, hold on to it, understand the market dynamics, and then
Mhm,
add as you can, add income or add when the market makes sense for it.
mhm,
I think this is a really smart idea because a lot of people think I have to do it now or I have to add this now, but
mhm,
to add that bungalow and to add the income suite later, that's not under rent control. I think that
mhm.
makes a lot of sense for sure.
Yeah,
Totally.
yeah, especially honestly, like especially if you can live in the bungalow, because then you don't have those carrying costs, right? You live in the bungalow, and then when you're ready to build the legal basement suite, you can still live upstairs. Your costs are exactly the same because you don't have carrying costs. So that's a really great strategy for someone that's
Mm.
going to buy a owner occupied property for an investment later in the future, and you can still live there while your garden suite is being built. So it's just that one
Yeah.
on, like that would be a really great strategy for someone that has like that big long-term vision. I That gets me like very
Yeah.
excited, but like it's not a strategy that I can implement because I'd have to pack all my kids
Yeah.
and my dog to this property. But if someone is like a young professional or a young professional couple, and this is something they can look into, I definitely highly recommend this strategy. Um, and then, yeah, like this reminds me a lot of like when I bought my property in 2008, I didn't do anything for 5, 6 years. But then, like the value of those properties increased. And then I was able to refinance. And then one of the properties I ended up doing that, I built a legal basement suite in it because it was years later. And so, and I had a tenant upstairs. So there was just, it just made
Good
sense.
dynamic.
So, you know what I mean? You don't have to buy something and do something to it right away. So,
I like that.
as well, Sam, like real estate is a long-term, plan.
Yeah.
So if you're planning to buy it and then sell in a year or two, it's not going to make sense. And that's my other, I guess, tip would be flips. So to me, I would be very careful with flipping houses right now as well. Um, that's just because the
Mhm.
numbers are more challenging. But I've never flipped homes before. I flipped one by accident a couple years ago, but that's never been my strategy. But I can see just based on the numbers and the market that it's not something that I recommend to my students.
Okay, that makes a lot of sense though, because it seems like it's a long-term play if they're able to sustain the debts or the
Mhm,
property itself. Understanding the market shifts and dynamics, you've been through 2008, so you've seen the
mhm,
changes now. Um, and when it comes to financial security, I know you mentioned this part too. Actually, one quick thing: when it comes to servicing the debt, let's say someone has a property. They don't know if it's the right time to retake out that debt and buy another property, because sometimes the tolerance for risk could be less with the market the way it is. What are you instructing your students to kind of look for when they're doing this, when they're going to leverage a property and then reservice new debt, which is more expensive, you think?
Yeah. So I always ask them how they feel about their current financial situation, if they're able to do that, because just because you can't do that right now doesn't mean you can't do it later. You know what I mean? So sometimes people think, oh my God, I need to refinance. And you don't have to. The money is still there. You're just kind of parking it until you can do it in a safer environment in the future. So for me, if someone is going to refinance some capital to invest, that investment really needs to be worth the extra debt. So you're either going to take it and buy something that's very high cash flowing, like maybe you're going to invest in a short-term rental or midterm rental, or you're going to do private lending with that money where the interest payment is going to offset your new debt plus make you extra cash flow, then that would make sense. But I would not recommend pulling out equity to buy a long-term property where the profits are not as high. That's not going to cover your new debt. So to me, that is a bit riskier, especially if their financial situation is not super solid, I
So
would
like
say.
stabilizing the foundation, almost having like good passive income, good active income, make sure you can service that debt, and then understanding that there are other investments that probably get a better return to
Mhm.
offset any debt that you take on. That makes a lot of sense.
Exactly. Yes, exactly.
So it's amazing. We've got a couple minutes left. So in your portfolio right now, like I know, tell me a little bit about what you have, your portfolio. I saw it online. It's very impressive. And your lifestyle. I remember you had an amazing beach vacation. It was like in the Maldives. I was like, wow,
Yeah.
I gotta go there now. But
Oh man,
um,
Sam,
yeah,
it was in Bora Bora. We went to Tahiti.
wow,
It was amazing.
amazing.
Yeah, it was amazing. It was honestly, it was on my bucket list for like 20 years. I actually never thought I would make it there because it sounds so surreal, right?
Yeah,
But it turns out we know someone from Tahiti. So we actually went to visit a family friend,
wow.
and Bora Bora was only a 1 hour flight from Tahiti. So I was like, we have to go. Like we're already here. Yes. And then our other trip was in Turks and Caicos. And that's we have 3 condos there, and we're a passive investor on that deal. So we have investors that are also Canadian. He's Canadian and he lives there. And so he's our active partner, and he's been doing an amazing job. So that's like one of the properties in our portfolio. So I do have quite the diversification as well. Like we have properties across Canada and they're in different markets. And I really like that because they're all doing like they're performing differently. We
Yeah,
have ones that are really well stabilized and it's cash flowing really well. And then we have others where we're really like working on trying to increase the income, minimizing the cost to make sure we're offsetting the interest rates. So there's a lot of work happening in some of our deals, and then other deals are like just, flying high and doing really well. So which kind of, that's kind of the whole point, right?
yeah,
So
absolutely. So with
mhm.
your lifestyle, like when it comes to, enjoying these things in the lifestyle with real estate, how has it allowed you to do that? Do you kind of, maybe do refi and then, or, there's some extra cash flow, and you have that ability to save up for that vacation? Like, what does that look like when it comes to, someone aspiring to get to that level to take these kind of amazing trips and have this lifestyle through real estate? I was thinking that's great.
Yeah, yeah, of course. Yeah. So it's really a combination of both, really. Like usually our refinance money is used for investments. We don't usually spend our refinance money. It's either going towards a new deal or going to private lending. And but I don't remember taking the refinance to sort of spend. A lot of our
Of course.
spending money is either from the cash flow of our deals or from income or from like other investments, either stocks or things like that. So this is why it's so important to have different multiple streams of income and investments, right? Because the whole point of refinancing, if you refinance and you take that money and you're using it to spend on vacations, then it's kind of, to me, it's like you're wasting that magical money from, your equity that, for me, it should go to investing and creating more
Yeah.
money, more wealth for you. And then the money that I spend is usually from like, active income. So other
Yeah.
investments and things like that. That's kind of how I balance it.
Yeah, definitely. Because it seems like you're allowing that money to work for you rather than you're going to keep working for that money. And then you're in that
Mhm.
cycle of, constantly chasing that money there.
Mhm.
So what's next for you as far as, your journey? What are you working on now? And yeah, tell me a little bit about that.
Yeah, thank you.
Yeah.
So I've been so happy with, the journey and the growth that I've had over the last few years. So my priority is to continue helping women, especially single moms. I find sometimes it's really scary to take that first step, because a lot of times what I hear is that, because they don't have that partner, sometimes it holds them back from taking that next step. So I really want them to feel confident and to know that there's a whole organization that is here to support them whenever they're ready. And that's sort of like my passion, is really making sure that women know that there are options and there's other ways to make money, whether it's real estate or stocks or just extra uh, like income streams. It doesn't always have to be your 9 to 5. Like there's so many ways to create income now. I find like this is like the best time really to make money. You can create income and it's like unlimited income out there. So if you have a skill, if you have like something that you can teach, if you're a yoga teacher, you could sell online courses. If you're a really great artist, you can sell your artwork online. So there's so many ways to make money besides just relying on your 9 to 5. And that's what we're here to share. Like, you can invest in real estate, you can create income through your hobbies and your passions. And we're here to support that. We're not gonna, discourage you or tell you that it's not a good idea. We
Yeah.
want to be like, yes, do it, because we know you can.
Yeah, it seems like such a community created of growth-minded women, able to help each other, understanding where they are in the journey, and opening up their mindset, almost like expansion, like Alfonso says,
Mhm.
like expanding the mindset of possibility. So whether that's the goal setting or what's possible for their life, that's pretty amazing. So where can people find you when it comes to what you're up to, if they want to get advice, especially young women who are listening to this, or if you're a single mom? Or want to join the Wink network, Wink, right? WNC.
Yes. Yes.
Where can they find you? And I'll make sure I have that information. But tell me a little bit what you have going on, as maybe an information session or anything else for anybody.
Sure. Yes. So they can connect with me. My website's super easy. It's danielleunsworth.com. And then on the Wink website, it's winkinvestors.com as well. And we're quite active on Instagram, myself and the organization. And we have an online event coming up, I believe, in 3 weeks. It's the last week of October. There's more information on it on our IG page. And actually, if someone follows us on our IG page, it has all the different chapters in Canada. So people can go and find, their local co-hosts. If they live in Hamilton, for example, or in Montreal, they just need to go and click there, and then they can follow that co-host. So that way they'll know when the next event is going to happen.
Okay, that's incredible. I'll make sure to link your Instagram. I think you're doing some great content, inspiring a lot of
Thank you.
people. So keep up the great work.
Thank you.
Last
You too.
question: how does someone know when they're truly ready to buy that first investment property? Because a lot of women or people may be on the fence about that. Am I
Mhm.
really ready? Sometimes you can overanalyze, and the real knowledge is actually doing. But what are your thoughts on that?
So this is my personal intake. I don't think anyone will actually be truly ready, but here are some signs that I think that your body and your mind is telling you. It's usually a feeling of being stuck. When you feel like you're stuck, like, like you want to do more, but you're not, or you can't, like when you feel stuck, it's usually because it's your body and your mind are telling you that you need to do something that's going to take you to that next level. And that's why you're stuck, because you need to move to another, you know, you need to take that extra step. So people, I don't think, need to be like, you don't have to keep learning, because learning more is not going to make you more ready. So when you feel like you're stuck, usually you need to go and take some sort of action, whether it's you know, connecting with someone that's just going to tell you, you know, what you need to do, or, you know, finding that resource, whether it's a book or podcast, etc., that's going to kind of inspire you to take that next action. Because that feeling of being ready, I have never felt it. Like, I've never
Yeah.
felt ready for anything. Like,
No,
I
you,
just
you know,
feel, you know what I mean? Like, I don't know about
yeah.
you, Sam, but
No,
I've
yeah,
never
you're
felt
never
like,
ready. I always have fear into that next thing. And it's like, oh, that was awesome. I
exactly,
got
yeah,
confidence from that. Absolutely
exactly.
right.
Like,
Yeah.
I've never felt that feeling where I'm like, okay, I'm ready to buy this property. Never.
Yeah.
I've never felt that. But I've always felt like, okay, like I have 3 or 4 properties. Like, I feel stuck. Like, how do I get to the next one? That's usually your sign that, okay, maybe you are ready. Do you know what I
Quote
mean? But
unquote.
you never
Absolutely.
feel ready. So that's
Absolutely.
how I take it. Usually when I feel like, oh, I feel I'm stuck. Like, how do I do this? Like, who do I need
Yeah.
to talk to about this? That's usually a sign that you are ready, but you're never going to feel it.
Yeah. It's almost like that
Fortunately.
spiritualist, like looking for more meaning, something
Exactly. Yeah.
purpose,
That
right?
when you're
Yeah.
craving
Yeah.
more,
Purpose.
that's usually a sign.
That's incredible. Well, Danielle, it's been really great getting to meet you as well. Great work on social media, and we'll be happy to support you any way we can. So thanks again.
Thank you so much, Sam. I
You're
really
welcome.
appreciate it.
Anytime. Thanks so much, Danielle.